How many of you were here last year for this event? All right, so we've got some people that thought it was worthwhile coming back. Looks like most of the free tickets, and then some new people too. Good. Well, for those of you that were here last year, we talked a lot about when the market was going to bottom, if it had bottomed yet, where we were headed with our local real estate market. And this year, I'd like to just start the discussion assuming we have bottomed. Now, for some of you, you may say, no, we haven't bottomed yet, or we're bouncing along the bottom, and some of you may say, yeah, we did bottom. The conversation really needs to head more towards what's happening today and where are we going. So what's changed? The local real estate market has absolutely hit a reset button in terms of the number of sales we have, prices, everything that was true a few years ago seems to be flipped on its head and different now. We are seeing some positive signs in the market, there's no question, but there's definitely still some weakness. What I want to caution you about and what I'll present today, I'm speaking mostly about single-family homes, condos, townhomes, and residential land year-to-date sales. The trends are different in different neighborhoods, in different towns, so I'm going to paint it with just kind of a broad stroke and tell you where the market is, but keep in mind that there are just different pockets, different things happening everywhere. I'm a numbers person, so if you're a numbers person, welcome. If you're not, buckle up. Don't worry, in about 10 minutes, Kristen will be up here to speak plain English. Hopefully you all will understand. Number of transactions dropped 60% from the peak, roughly overall, but it's rebounded about 44% from last year. Sales dollar volume declined as much as 75% depending upon location and real estate type since the peak, but we've seen a 25% rebound from last year. Sales prices were averaging 15% less than asking prices during the first quarter of last year, which is in some ways the bottom of the market, depending upon how you look at it. And this year, that discount has shrunk to an average of about 10%. So buyers and sellers, when they can get together, have gotten a little bit closer. I want to talk about a few cocktail party myths. As a broker, this is a real challenge right now in the market. You have a lot of people saying a lot of different things about what they see happening. And sometimes it's not too far from the truth. Sometimes it's quite a bit far from the truth, and it's difficult to work with clients and even just have conversations with people about the market when you're running against some of these. So the first myth is that the market is down 30% and still dropping. Don't paint the market with one brush. There's absolutely parts of the market that are still struggling, but there are parts that are going back up. Transaction volume actually decreased much more than 30%, but it has now turned back upwards. Average sales prices in many neighborhoods actually never decreased at all, and they've continued to increase. The average price per square foot has dropped 20+%, and in some cases a fair bit more than that, depending upon where you're talking about and what type of real estate. But there are areas where price per square foot is actually increasing again, and there's areas that it's decreasing. Basalt is still struggling, and it seems that prices are weakening there. Snowmass single-family homes on the upper end have been very strong. For the neighborhoods that are struggling still, we've seen that that pace of deterioration has really slowed down. So areas where we aren't yet maybe at the bottom, we feel like we're very close to it. We've definitely seen things start to firm up more. Another great myth, inventory is still growing. In fact, there was some items about this in the paper recently. Listing inventory actually increased quite a bit from more or less the peak of the market until last year, went up about 30% overall. But if you look across real estate types and neighborhoods over the last year, it's actually remarkably flat across many different characteristics. This is my favorite one. It's a $1,000 a square foot market. I'm sure there's a few brokers in the room that have had to deal with this. Either you have buyers that say they're not going to pay more than $1,000 a foot, or it's just a $1,000 a foot market and that's what they'll pay. Well, that seems a little silly to me. I mean, which market are you talking about? If you go through two 5,000 square foot houses or three 2-bedroom condos, I would challenge you to tell me that all three of the condos and 2 of the houses were worth $1,000 a foot. In Aspen, so far this year, we've seen a low minimum sale of $442 a square foot and a high just recently for a condo of over $2,000 a foot. Hardly seems like you can call that a $1,000 a foot market. In Snowmass Village, a low this year so far of $346, and a high of almost $1,700 a foot. Basalt may not be yet a $1,000 a foot market. A low this year of 146 and a high of 585. The general rules of thumb that we seem to be hearing out there is Aspen's 1,000 a foot, Snowmass is 700, and Basalt's 300. That may be true depending on what you're talking about, but hopefully you can see from these ranges that it's absolutely not true for the whole market. I don't know how well you can see this graph, but what it shows is that in Aspen, so far, year to date, 70% or so of the condos that have sold for more than 1,000 a foot. That's true for about 50% of the homes in Aspen year to date, but it's actually true for more than 60% of the homes that have sold in Snowmass Village to date. So a good chunk of the market is selling well north of 1,000 a foot. I think these are good signs that buyers that still believe in our market and want to be here and see value and find the right opportunity, they'll buy in. There obviously is also the other side of the market where we've seen discounts and distressed sellers as well, and that's a part of it. That's a healthy part of recovering from where we were. So where are we going? Last year we presented to you the first ever Aspen Snowmass Business Confidence Index. The idea of the index was to measure the pulse of local business leaders. We send the survey out quarterly to about 100 or so business owners. And we take the results, plug them in, and come out with a number that basically says, much like the Consumer Confidence Index, says, are we positive thinking or are we feeling negative as a business community about where we're heading? Well, looking back to last year, we've had 5 consecutive quarters now that we've been able to report, and all 5 have been above 50, 50 being neutral. Below 50 would be a negative sentiment, above 50 would be positive. Not very strong, mostly in the mid-50s to low 60s, and the most recent reading was just a few weeks ago and actually dropped a little bit. And that's probably consistent with on the macroeconomy, what we've been seeing just today, the unemployment report. People are concerned about when job creation is going to start again, interest rates, real estate, when it's going to rebound, and some of the broader stock market trends. The good news is we still have overall positive sentiment about where businesses are going in the next 3 months and the next year, but I think people are pretty tepid right now about that enthusiasm. I want to share with you now a new index we've developed. We spent over the last year doing it. It's the Aspen Snowmass Real Estate Market Index. Something that we've really toyed with to try and come up with what's a great way to be able to communicate in very simple form. Is the market getting stronger, weaker, or just staying about the same? I'll point out to you a couple things about this. Right now, we're here on the far right. In fact, that's projecting for Q3 of 2010. The upward sloping line on the graph indicates a strengthening market, downward sloping correspondingly a weakening market. This is not a price graph. If it was, and you may not be able to see the numbers at the bottom, but this is 2008 over here, 2007. Prices were actually going up all the way through the end of 2008, so the line would have continued up all the way through here. Had we had this index back in 2005 and 2006, we might have counseled our buyers a little bit differently. We might have said, take a look. Even though it feels like, and the media is reporting on sales dollar volumes going up like crazy, and it seems like prices are still going up, we might have taken pause and said there's some other fundamentals in the market that are actually making it stabilize and slow down. As you can see, the market dropped here, and this was on this graph around 2008, which more or less coincided with when we saw prices really decline here. The other thing to note is we've been now for more than a year in a stabilized mode. It doesn't mean that the market's going up or down. We've seen a few minor up and down curves. In fact, it was fairly strongly up for the second quarter, but it's going to take a dip back down in the third quarter if the trends continue. But more or less, we're back to where we were after September 11th, 2001, where the market had dropped before and stabilized out a bit before it started rising up. This is one of the indicators we're relying on right now that's helping us feel comfortable that there are positive signs out there. Like I said, there's a lot of things to still pause and be concerned about, but when you look at the numbers, this is what we're seeing. Now, as I promised, for those